Okay, let's get into it. We're looking at a wild theory, Japan triggering a US economic meltdown.
So, could Japan really tank the entire US economy? Some analysts are now saying yes.
And get this, the argument is Japan doesn't have a choice. They've been backed into a corner.
So what's the big idea here? Well, it all starts with Japan's very specific financial situation.
Okay, check this out. Japan holds a staggering $1.3 trillion in US debt.
If Japan decides to just sell that off, it would be a total nightmare for the US economy.
But why would they do that? The whole thing kicks off with one simple thing: oil.
You see, Japan gets 95%. That's almost all of its oil through the Strait of Hormuz.
So the theory is, a war there closes the strait, and Japan's whole economy just grinds to a halt.
To really get this, we've got to look at the unique financial system they built together.
It's all about the petrodollar. Japan bought its oil in dollars, propping up the entire system.
So Japan made dollars from exports, then parked that cash in US bonds. A perfect loop, right?
Then there's this other wild thing called the carry trade, all thanks to Japan's low interest rates.
It was like a giant money pump. Borrow cheap in Japan and invest for profit in the US.
Right, so here's where the dominoes really start to fall. That oil crisis kicks off a chain reaction.
The analysis lays out these 5 steps. It's a pretty scary and logical sequence of events. Okay, so what does this all mean for the US? Let's look at the final impact.
With both Japan and the carry trade gone, US borrowing costs could absolutely skyrocket.
And this is where it hits you. We're talking about things like your mortgage payments. The claim is mortgage rates could jump from 6.5% to 8%. That's a huge deal.
So it leaves us with one big question. Is Japan being forced, or is this a calculated move?